great phrase in technology, which is, if you're not paying for the product, you are the product. A few seconds before they place the trade for you, they actually give your data to a hedge fund, Citadel, which can then bet alongside you or against you with the information that you'll be trading in a few seconds.
Welcome to the Contract Teardown Show from Law Insider, where legal experts tear down contracts from some of the most well-known companies and high-profile executives around the world.
In this episode, the founder of DoNotPay.com, Joshua Browder, argues that Robinhood Financial's customer agreement is harmful to consumers. He goes point by point, from pricing changes to data selling to arbitration clauses, and invites consumers to join class actions against Robinhood and similar companies. It's an interesting time with Reddit users driving huge trade volume, and contracts are at the center of it. So, let's tear it down. Hey everybody, welcome back to the Contract Teardown Show from Law Insider. I am Mike Whalen. On this show, we do exactly what the name sounds like. We take contracts, documents, we beat them up, we say what we hate, we say what we love, with smart people like Joshua over here. Joshua Browder, how are you tonight?
I'm really good. Thank you for having me.
Absolutely, and it is night. Today is the 2nd of February? We're now in the post GameStop went crazy, Reddit went nuts, now let's talk about it world. So we've got a special episode here where we're talking to Joshua about some of these things and what happened with Robinhood. Specifically, we're going to talk about this document. Let me share my screen with you guys real quick. This is the Robinhood Securities Customer Agreement. It is quite long. It's 33 pages. It's one of those things that people are just clicking through. We've talked about these documents before, but in this case, these people agreed to some things. So we're going to talk about what that means for the users. Joshua, when are we going to see this document? Why does this thing matter in this moment? Why are you and I having this chat right now?
So we're in an interesting era in the world where every consumer is becoming an investor. People are pouring their life savings into the stock market, their paychecks into the stock market. And Do Not Pay, my company, helps fight for consumer rights. And some of these brokerages like Robinhood are including some very anti-consumer terms in their agreements. And given that it's now a mass market issue, consumers should know what they're signing up for, especially as all their money is tied up in the stock market these days.
Well, and especially in this case, because this is Robinhood. Like the point, the raison d'etre of this company is to be for the consumers, to be for the everyman. So thinking about how they use it, tell me more about Do Not Pay, your background a little bit. You and I have talked for years about what Do Not Pay is doing on the consumer level law thing. You know, we've talked about family law, we've talked about estates issues, but now we're talking about financial markets. What's Do Not Pay's relationship with this issue?
Do Not Pay is a consumer advocate, and we spent the past 5 years fighting back against large companies. And this can be things like getting you a refund from Comcast, beating parking tickets, any issue that affects ordinary people. And over the weekend and last week, everyone was trading GameStop and other stocks. And unfortunately, these brokerages got in the way. They limited buy orders. People were having trouble withdrawing their money. All of these very anti-consumer things started happening. And the financial system is stacked against the average person. You see hedge funds making all the money and the average person getting left out. The legal system is stacked against the average person because it costs hundreds of dollars an hour to hire a lawyer and get justice. And so for Do Not Pay, this case combines both the legal and the financial system. And it was so important for us to help people fight back.
Yeah, and I appreciate that. And without, I'm going to assume most of the people who are reviewing this show is targeted to contract nerds, people who read this stuff all the time. So I'm going to assume most of you have followed this story. If you haven't, there's a delightful Twitter video created by a comedian named Avalon Penrose. Her explanation, nearly in tears, over what a hedge fund is beautiful, and you should go watch it. But the short version of this thing is, and Joshua, you tell me if you're with me on this, the short version, as I understand it, is the people who run these hedge funds, who have all the money, they took a bet, they shorted these stocks. They were like, well, of course GameStop's going to go down. kids can buy games on their Xbox. Why are they going to go into a physical store during this time? They said this is probably going to go bad. And then Reddit, who Penrose referred to as an online reading club, went and just decided to shoot that stock up. And so the volume just sort of went crazy, right? So here's Robinhood, who is a consumer level, if you're a Redditor and you're investing, you're probably using Robinhood. Robinhood had this huge amount of volume, of just trade volume on those couple of days of trading. I think I heard somebody said it was like 7 to 8% of the trade volume on these couple of days, which is insane. So does that sound right in terms of background, in terms of story, that the volume is the big question?
Yes, and in the past, people would know what they're doing. They would be professional investors. But now we've had people who work at McDonald's, they put their entire paycheck into Robinhood and they expect to make money. And when they lose it, it's devastating for them.
Hey everybody, I'm Mike Whalen. I hope you're enjoying this episode of the Contract Teardown Show. Real quick, I want to ask you to do me/you really a quick favor. Look down below. You'll see a discount code to join the Law Insider Premium subscription. When you do that, you get access to more content like this. You'll see webinars, daily tips on contract drafting, not to mention access to the world's largest database of sample contracts and clauses. It will help you write better contracts faster. If you want to do it right now, there's a code below, so get there. Also, if you're part of a larger team, if you're in-house or in a law firm, just email us. We're at sales@lawinsider.com. We'll make sure you get a deal as well. Come join us in the community. The code is below. Let's get back to the show. Right. And especially, we'll get into the contract language because this is so important. This is the thing, as we talked about on this show over and over again, there's this sort of dual thing where you're using the contract language to nudge people, to try to get them to do certain behaviors, but you're also sort of recognizing that most people are not going to read through this 33 pages, even for something that you think is obviously important. So the question for contract lawyers, I think, is how do we draft and create knowing that social dynamics in the background? So we're going to go at it that way, Joshua. We're going to start by going through the contract language. We'll go down to 13. This section talks about market volatility. Market orders, their ability to limit orders. They say particularly during periods of high volume, illiquidity, fast movement, volatility in the marketplace, the execution price received may differ from the quote provided. They're trying to create this, we know things can go crazy. I'm guessing they didn't know it could go this crazy, but they knew it could go crazy. What about this contract language sort of sets off your radar for the consumer?
So buried in the terms of service, what they're saying is the price that they show you when you're buying the stock might differ from the price you actually have to pay. So if you go into Starbucks and order a coffee and they say it's a few dollars, you're charged a few dollars. But what Robinhood is saying is they can quote you a price in dollars for any stock, and what they charge you can actually be different. And it can actually be 5% different. And that might not seem like a lot, but the S&P 500, which is an index of all the stocks, typically grows between 5 and 20% a year. And so a 5% difference in the price is actually a lot, and it gives them a lot of wiggle room to give you a bad trade. And what they say is they don't support traditional market orders. So what that means is some other brokerages, you can say, I'll take the real price of the stock. But Robinhood actually just placed a limit order above the price within 5%. And so you're getting a bad deal when you buy through Robinhood. And they're saying that they can do that buried in the terms of service, which no one reads.
Right. And I mean, like you said, 5% is a retirement plan. That's literally a number that you're after in making a retirement plan. And to be clear, they're talking about fast movement, volatility, volume. They have since last Thursday or whenever this started happening, they've had to go get billions of dollars of liquidity just to protect from this volume. So they've definitely hit volume. Going to a second section down to 23, where it talks about equity orders and payment for order flow. Talk to me about the SEC rules. This is what the CEO has said over and over of Robinhood, is that it's not their fault, right? That they had to go stop the trading on, it was GameStop, it was BlackBerry, I think Bed Bath & Beyond was on the list. You know, all these Reddit bumped stocks. Robinhood stopped the deal flow, right, on these particular stocks. They keep saying it's the SEC's fault. Do you buy that? What's in this language in 23 that you think gives them maybe that power?
So just to give some background about Robinhood's business model, there are no commissions when you buy and sell stock. And so that seems great. You can trade for free, which is what they advertise. But the question that everyone has is, how does Robinhood make money? And there's this great phrase in technology, which is, if you're not paying for the product, you are the product. And this is what this 23 clause is getting at. And the way Robinhood makes money is they sell your data. And this is not some conspiracy theory. This is actually what they do. And the way they sell it is they, a few seconds before they place the trade for you, they actually give your data to a hedge fund, Citadel, which can then bet alongside you or against you with the information that you'll be trading in a few seconds. So, for example, say you're trying to buy GameStop stock at $100. They'll sell the fact that you're trying to buy that at $100 to Citadel, and just before you place the trade at $100, Citadel will buy it at $100, and so you're forced to pay $101 because if we remember earlier, they said that they can price it within 5%. And so this is really not very consumer friendly because the hedge funds are getting a better deal than you because they get the market information just before you place the trade.
Yeah, I'm thinking about Senator Warren has called for all kinds of investigation into this and other. Frankly, it's shown bipartisan legs. Both sides of the aisle here in the U.S. have pushed back against what Robinhood did in this case. And it sounds like, according to this clause, it's because they are, like you said, in these terms, giving an advantage to somebody other than the purchaser, right? But if people get upset about that, it's the United States, and we sue people, right? But that's not quite right. If I jump down to 38 to the arbitration clause, we've talked about arbitration clauses a lot. Lawyers, we're sort of put in a box where we're supposed to like these things because our clients do, but they're not always great for the consumer and not easy to write because there's so many rules around them. In 38, it says this agreement contains a pre-dispute arbitration clause, all bold type. By signing the arbitration agreement, you're agreeing that you give up the right to sue each other in court, including the right to a trial by jury, except as provided by the rules of the arbitration forum. I'm seeing suits already in the news. What do you think about this arbitration clause?
I think it's one of the least friendly things a company can do because you're giving up your right to sue Robinhood in court. And the reason that some companies do this is maybe you're playing a game and you don't want to have to sue a company doesn't want to be sued for $1 million because you lose your gems in a game. And so there is some reason behind this. But the reason Robinhood including this is so bad is you have tens of thousands of dollars. People have tens or even hundreds of thousands of dollars with Robinhood. And so what they're saying is you can't take any action against them in the courts if things go wrong. And you lose a lot of rights. You lose the right to discovery. These arbitration hearings, you don't have the same rights to depose Robinhood executives. You can't get documents as much as in a regular courtroom. You lose the right to interrogate witnesses. And arbitration is less scary than a lawsuit. And so it means that the companies can behave badly because they have less disincentive of a lawsuit.
Yeah, and I was listening to a session on Clubhouse recently where they were talking about the speed, right? That a lot of these alternative dispute procedures are meant for speed, which sounds good in the abstract, but a lot of times the slowing down is what gives the inexperienced litigator, a chance, right? That they get to pool their resources, slow down, think. Speed really advantages the people who are used to speed. On that point, I'm going down to D in the arbitration clause. It talks about class actions. Again, class actions they're faster, but it's also just like pooled power among all these small users. But it says no person shall bring a putative or certified class action to arbitration, nor seek to enforce any pre-dispute arbitration agreement against any person who has initiated in court a putative class action. What you guys are doing, as I understand it, with Do Not Pay is facilitating people getting on to class actions. Are we tipping at windmills? Does this clause make it so you can't do that?
So we also help people do the arbitration, but I would say this clause is very dangerous for consumers because the number one thing a company is scared of is a class action. They might be able to brush away an individual lawsuit. If you have thousands of people coming together, it's much more scary, and these settlements can go up into the tens or hundreds of millions of dollars. But one thing I would say is this is not a done deal. There are lots of examples. There are currently around 50 class actions being filed against Robinhood because of their behavior in the past 2 weeks. And the question I'm sure you're having is, why are they doing that if this clause exists? And it's not a done deal because there are plenty of examples of companies in the past having this clause, but still being liable for class action and doing settlements. So one example recently was there was this bank, online bank called Chime, and their debit cards just stopped working one day. And it caused a lot of problems. People were in restaurants and they couldn't pay for their meal. And so sometimes the police were called and all of this dramatic stuff. And a class action was filed against Chime, and they also had this clause. But it didn't stop Chime from settling for millions of dollars. And so although this is a very consumer unfriendly clause, I don't think people should give up hope. If there are enough if there's enough wrong in the world, a terms of service is not a get out of jail free card for a company. And so I think that's where we should leave it on a positive note, where although these clauses exist and consumers should be aware of them, there is still hope.
Yeah, and I think the political pressure is going to be huge, right? If nothing else, there's already movement there. I want to lead people to Do Not Pay who are watching this, who are consumers, and so we'll talk about that in the end. But before we get to that, I want to talk about a principle. I know you have not been called a friend to the attorney world, right? You have very explicitly said you're trying to get rid of the need for these intermediaries on all these transactions that consumers are dealing with. I'm thinking about this document related to what you believe is true about the accessibility of the law, and also what Robinhood does, right? Robinhood, in their branding and everything they say, is we're here for the little guy, we're here for the little gal, and then they put a 33-page contract, terms of service, in front of people, as if any of those people are going to read it and understand what any of it said. Tell me your view on the responsibility of these companies to draft in an accessible way, particularly if they're going to say they're the accessible option.
I think that being upfront is the most important thing. It's perhaps very innovative to have this new business model where you can sell the data rather than charging people commissions on their trades. But you have to tell people there should be a checkbox when you sign up. I'm okay with Robinhood selling my data to hedge funds. And then consumers could have the choice. But the fact that it's buried in this 33-page document with all this jargon is not right. And I think a lot of people feel misled.
Yeah, I think there's with a lot of these technology companies and sort of the move to empower the consumer, there's this ethic, right? This ethos in Silicon Valley that we're here for these people. But if we as lawyers then undermine that branding and make it so that it's just in name only, I think we have some responsibility to think through that. So at minimum, even if you've got to write these kind of 33 documents, I would encourage you lawyers to be really closely tied to the marketing, the branding departments, and talk to them about how can we communicate this as part of the product in a way that people are conscious of what they're getting into. For those people who signed up for this, didn't quite get it, now are in a position where they have to regain some power, what's the best way for them to get on some of these class actions, maybe get in touch with you and Do Not Pay? What's the best way to get to you?
So donotpay.com or email me at joshua@donotpay.com. And we have a lot of actions against all the brokerages because it's not just Robinhood. Other brokerages have similar clauses. Some are more consumer friendly, some are less. And so it's an interesting time, but I think they all need to be taught a lesson.
I appreciate you, Joshua. Hopefully you don't totally succeed in your mission to get rid of all lawyers, because I want to still hang out with you. I thank you for joining us. For all of you who are watching, we'll have links to what Joshua's doing, to this document from Robinhood, and other resources. Just go to lawinsider.com/resources. Also, if you want to be a guest on the Contract Teardown Show, just email us at community@lawinsider.com. Thanks, Joshua. We'll see you guys next time.
Thank you.